morning, good morning, good morning. Thank y'all for joining. We are gonna get started in about 2 minutes. If y'all could do me a favor and click on the link in the chat and subscribe to my YouTube channel. I'm going to drop the link in a second because I'm gonna be doing these. Let me turn this down. So I'm going to be doing these tutorials and these trainings maybe once or twice a week moving forward. And so if you want to get alerts whenever I drop a new video, subscribe to my page, please. It is going to be worth your while, I promise you. I'm putting together some content and just some little clips, nothing, extensive or too long. I'm gonna be real quick, not taking up too much of your time, but just trying to drop some knowledge and share some of the things that I've learned so that you guys can um help you guys kill the market this year. uh Hold on one second. But yeah, I'm gonna drop the link to my YouTube channel real quick, and um, and then we'll get started. What am I doing? Doing this the hard way. So my YouTube channel link is in the chat, guys. If you could click on that, subscribe so you can get alerts whenever I drop a new video. I am gonna be getting started in a few seconds, and I hope this is helpful for somebody, because I know that for me, it was not something that I learned very early in my trading career. And so it was a bit difficult for me to, let's do that, close that. That's enough, thank you. So let's get started, guys. Thank you guys for joining on. This is the start of, I guess, my YouTube channel. I'm gonna be sharing some content, sharing some little training videos and tutorials for trading. I'm not gonna be teaching DeLorean. DeLorean isn't my strategy. Um, it's not my content, so I'm not gonna be teaching DeLorean. But what I am gonna be trying to share with you is some knowledge on different trading topics that we can use along with other strategies in order to enhance our trading and enhance our process as we trade. And so right now, this is my YouTube channel. It's going to go through some rebranding and all that, but right now it's called JFX Sniper Trading Tutorials. And we are going to get started. So let's go, family. So today we're going to be talking about average daily range, right? And we've all heard this term in our training videos that we've been studying and going through the process of becoming snipers in the market. We've all seen it, but do we all know what it means, right? So I know when I first started learning to trade, I heard the term and I knew what the words meant, but I didn't really understand what the average daily range was and how to use it when trading. So let's go through that today, right? So the average daily range is basically the amount of pips that a pair moves in a day. Well, we know that, we've heard that in the videos, but what does that actually mean to me as a trader, right? Um, and then how do I find out what the average daily range of a pair is? So let's go through that right now. One of the things that I've learned and used quite a bit previously before I found other ways to do it, I use this website here, investing.com. So if I click on that link there, it takes me to this Forex volatility calculator page, and you can type in the number of weeks that you want to get the average for that for all the pairs, and you click calculate, and this will calculate the average daily range. This is the number of pips that each pair moves in a day. It even has exotic pairs. So this is a really easy and really nice resource to get to see how many pips does a pair move in a day on average, right? And there's also some other statistics down here, but we don't need to go that in depth. This link here is gonna be, I'm gonna drop this in the chat for you guys so that you can see it. I got you, Annie. I know that question was coming, so I just dropped the link in the chat so you guys can start to use this if you choose. This is very helpful because it helps you to see how much a pair moves in a day so that you know how to trade this pair, right? And you can see what the pair has done for the day and kind of get an idea or a feel for how much more can this pair go from where it is right now when you're entering a trade, right? Because sometimes you might say, I'm going to set my trade and I want to catch at least 30, 40 pips from this trade, but you need to know what this average daily range is in order to do that properly and set a good TP that's realistic and is likely to get hit. So let's go back. So now this is just a screenshot of the page that I was on. You know, it has all the pairs. And what I want to note is that you have, you know, the three different types of pairs, right? You have your majors, you have your crosses, and you have your exotics, right? They all have varying average daily ranges. So if I go back real quick, we'll look and see, no, not this. We'll look and see, so we have some pairs with lower ADRs. Like here, NZD USD has an ADR of 49 pips, right? So in a full day, on average, NZD USD only moves hardly 50 pips. So if I'm trading NZD USD, I'm not going to set a 50 pip stop loss because, I mean, a 50 pip take profit, because that means you're going to catch every single pip that this pair moves from the peak of the day to the low of the day. And that's not realistic, right? So, so yeah, that's the total amount of pips per day, but up and down. So I'm going to show what that looks like on the chart in a second, but I just wanted to kind of make that point before moving on. So you have your majors, and for those of you who may not know, majors are any pair that has a US dollar in it is a major. So USD JPY, GBP USD, Euro USD, all of these pairs are your majors, right? There's 7 majors, and basically your Forex crosses are all the other pairs that don't have the US dollar in it. So AUD CAD, AUD NZD, EUR AUD, these are all crosses between 2 different majors, right? So, and then you have your Wiseman pairs, which are crosses, but these are called the Wiseman pairs informally, just because of their ADR is so much higher than some of the other pairs. So if you look at the list, you have, some of the crosses are 60 pips, 59 pips. But then when you look at the Wiseman pairs, GJ is 123 pips per day. GN is 141 pips per day. EN is Euro NZD is 129 pips. So these are much more volatile than some of the other pairs. And so it helps to know what you're trading before you trade, right? You want to know how many pips does this move and how volatile is this pair before you get into a trade so that you know how to set up your trade. So let's close that. So Um, so the most volatile Forex pairs are GBP JPY and GBP NZD. As you can see here, GN is 141 pips and GJ is 123. Personally, these two pairs are my favorite. Um, just because, GJ is my initials. Oh, I forgot to tell y'all my name. So my name is Glenn Jarvis. I am one of the co-founders of the Matrix Sniper chat. Shout out to the Matrix Sniper fam for supporting and taking this journey with us. But yeah, my name is Glenn Jarvis. GJ is my initial, so I always like this pair. And GN is my boo. I've made a lot of pips off of this pair. And I just like it a lot. That's my favorite pair. It's also happens to be the most volatile pair. And now the least volatile pair is Euro GBP, which has um, an ADR of about 40, 49, 50 pips. It's kind of rivaled with EUR-CHF. Surprisingly, we've caught a decent amount of pips on Euro CHF um, in recent times due to using AGB in our trading. But yeah, those two pairs are some of the least volatile. Chef pairs tend to move a bit less than others, but yeah, these are the different types of pairs, and then you have the exotics, which the pip count is a bit different, and their pip count is like huge. So USD Mexican is like 2,500 pips, right? But it's an exotic, so the rules are a little bit different. The pip count is very different. So let's move on. So the crosses, I think I'm gonna share this because a lot of people don't know this. US news moves the entire market. So even if you're in a trade and it doesn't have USD in the pair, like I said, Forex crosses are crosses between two majors, and the majors are all based off the US dollar. So if there's major US news and you're in a trade, depending on what kind of cross you're in, it'll have an impact on your trade one way or another. So for example, GBP NZD is a cross between GBP USD and NZD USD, right? And so if there is, let's just say, positive US news, right? That means the US dollar strength is going to go up. That means this pair is going to be pushed up because the US dollar is going to be pushed down, sorry, because the US dollar is the counter currency for both pairs, right? So both GBP USD and NZD USD are going to go down if the strength of the US dollar goes up, basically. And in this case, Euro CHF is a cross between the Euro USD and USD CHF, right? So the USDs cancel out. If those of you who remember learning fractions back in the day, the USDs cancel out and you're left with Euro CHF. In this case, this would likely consolidate with US news because the US dollar is opposing it's each other. It's a base currency here and it's a counter currency here, right? And then CAD JPY, the US dollar is the base currency in both pairs. So if there's positive US news, both of these pairs are going to go up. And so CAD JPY is likely going to go up as well. So that is how the cross pairs work. So I'm mentioning this because I don't think this is something that a lot of people pay a lot of attention to, as far as the impacts that news can have on every pair, especially major US news, because I was in a trade yesterday and it was not a USD pair, but when that FOMC news came out, it totally turned my trade around. And I was wondering why for a bit, but then I was like, oh, the market's reacting to news. So knowing what pair you're trading is important. And this is one of the things that is important to know when you're trading and setting up your TPs and stop losses and all that. So going back to my notes now, US news moves the entire market because every pair is tied to the US dollar, whether directly, like in the majors, or indirectly, like in the crosses and the exotics. Uh, so let's get into how do I use the ADR when I trade, right? Now, the way we trade, we look for the high of the day and the low of the day in order to find an entry, right? So what you want to do is if you're looking to set up a trade, you want to measure, first of all, you want to know your ADR. So in this case, my ADR on this pair was, let me open this up. My ADR was about 109 pips on this trade, right? On this pair. And so we know that if we find the high of the day, we're seeing that this has made a high, it's, turning around, and it's, starting to head back down, and we're taking our entry here. We know, okay, the high of the day is up here, and we're gonna measure our ADR from this peak go down, not from the entry, because this is part of the ADR up here. We're waiting for this to play out so that it can present an entry, and then we're entering here at the bottom of one of the entry candle, right? So you measure your ADR from the peak of the day, come down, not from where your entry is. You have to factor in your stop loss into your ADR. And your ADR, our TP based on the strategy that we use is ADR divided by 3 times 2, right? So when you're looking for where to set your TP, this is TP1, where you can use that as a checkpoint and take partials, and then your TP2 is your full ADR divided by 3 times 2 down here, where you measure, okay, 36 times 2 is 72, so I'm going to take from the high of the day, measure down 72 pips. First push is 36, second push is 36, and your first TP, where you take partials, or you can pull out all the way if you choose, is here, and then you hold for either an exit down here somewhere, or for it to hit your full TP, right? So what I was doing a lot in when I first started was I would start from here, and I would say, okay, ADR divided by 3 times 2 is 72. So I'm setting my TP to 72 pips from here. And so that's less accurate, right? You're not gonna, you can, because it's a trend run that we're trying to catch. We're trading with the trend. So it could, hit that TP from here, but that's not, there's a less chance that that's gonna happen. So we wanna enter the highest probability trades. And so setting your ADR is, knowing where to set your TP based on ADR is important. And I'm going to go through more examples of that in a second. Um, so how do I find the ADR? One way is to use indicators, and the other, if you're a math nerd like myself, is to do it by hand. Which basically what you want to do is pretty much just measure the amount of pips from the high and the low of the day for the past X amount of days. So if you want to see what's the ADR for the last 5 days, you measure the amount of pips from the high to the low for the last 5 days, add them up, and then divide by the number of days, which is 5 in this example, and that will give you your average daily range for that particular pair. You can do that if you choose, or you can click on the link that I sent and it'll calculate it for you, or you can use one of these indicators that put it on the screen for you, which I will show you in a second. One of the tools that you can use, the indicators, is called the average daily range by Traping. It's in here, and don't worry, I'm gonna provide these. I'm gonna drop these notes in the chat in a second so that you guys can refer back to this. But this indicator just draws the green line, the green and red line showing the high of the day and the low of the day, based on a certain amount of days. You can set the amount of days you want it to calculate, and it'll move the lines accordingly. So this is pretty useful. It moves with the day. So I don't use this one because the indicators that I use have it included in them already, but this is pretty nice if you want to have a more simple chart. So Um, the market maker matrix doesn't work anymore, but if you type in matrix, it'll pop up, and you click on it, it'll show up as my trader journal on your chart. So if you look at your indicator list on TradingView and you type in matrix, it'll pop up. When you click on it, it will come up as mytraderjournal.com, as you can see right here. And you can customize that as you choose. But it will display your high and low of the day, as well as your ADR divided by 3, your ADR, and your A range, the size of your A range. So pretty helpful. It also identifies your kill zone. So 6 a.m. to 10 a.m. is the time that we normally trade. And then there's the DeLorean helper, which is pretty nice as well. It identifies your entry candles, as well as the A range and your EMAs, your DeLorean EMAs. So these are a couple indicators that you can use to help factor in using your ADR in your trading. And basically, you want to know what you're trading. And we're going to do some examples on live on the charts real quick, so you can really see how to use this. But you want to look at how far is your entry from the high or the low of the day, and that way you can really set your TP in a realistic spot and have a higher probability that it'll get hit and not turn around before it hits your TP. Right. But even if it doesn't hit your TP, we all know our exits now. We know a bunch of exits that we can use in order to pull out at the right time to secure profits as we're monitoring our trade. So let's look at the charts real quick, and then I will take questions. So let me get a clean chart. Let's do this. No. Let's do this, remove indicators. So I'll start with a clean chart, and let's see, let me add my indicators. So I will add matrix and, excuse me. And then I like to add my sessions on chart. Minimize that. And let's get rid of some of this clutter. Sorry about that. That's my juicing alerts for SPX. It's a 5-minute shift on SPX if anybody wants to go check that out. Okay, so let's do, actually, you know what? Let's do this. Find a regular pair. All right. Okay, cool. So this is NZD CAD. Let's go back and find a nice example to look at. Okay, so if we're looking at this, right, we have our A range, our no trade zone, and we have our kill zone here. We see that, actually, you know what, now let's look at a different example. I want it to be a nice textbook example. Okay, yeah, let's look at this one. So you have your A range, you have your counter trend push to the top side where it makes a new high. and it makes a nice M. Entry candle is here, right? So we enter after this candle. So if my entry is here, entry here, I got a little push back there. I set my stop loss here. So now I need to know, where do I set my TP, right? I look here, my ADR is 59 pips. My ADR divided by 3 is 20 pips. So my ADR divided by 3 times 2 would be 40 pips. Now, this is one example where your ADR divided by 3 times 2 didn't get hit, right? Because it's all the way down here. But we would have taken partials at this checkpoint anyway, right? And then we would have had an exit after that that we would have followed and secured the rest of our profit. So, you know, we have these situations where our TP doesn't always get hit, but knowing the ADR can say, okay, well, I know my TP1 is here. I can take partials and see it came down right to the bottom, right here, right to the bottom of A range, wicked down, and then turned around. You would have been able to secure partial profits here, knowing that the ADR divided by 3 is 20. You stop right here and knowing that, hey, if I want to know where my full TP should be, I measure from the top here. Hold on, let me get rid of that. So I'm going to measure from the high of the day, come all the way down, and actually ADR divided by 3 times 2, 40 pips would have gotten wicked right here, and you would have your full TP would have actually been 23 pips, because again, you have to factor in your stop loss into your well, your stop loss actually goes here, but you have to factor in the rest of these pips up here into your calculations for your ADR divided by 3 times 2, right? So that is how you set a realistic TP when you're trading, right? Because if the ADR of the pair is only 60 pips, you can't set a TP for 50 60 pips. It'll, you know, it's not realistic. It's not going to get hit. You know, you want to set your trade up with the highest probability of being successful. So that is the whole idea behind it. Let's look at a different pair real quick, and then I am done, guys. Let's look at a wise man pair. So actually, let's look at GJ, because GJ gave a nice example yesterday of a nice ADR, full ADR run, right? So I took this trade yesterday. So we have the A range, counter trend push to the low, and then entry candle was here. I got in here after this candle. And so basically setting TP on this was, so I had here, had my entry here, and my stop loss was here. But measuring for your ADR is 113 pips, and ADR divided by 3 is 38 pips. So ADR divided by 3 times 2, measure from here, is, let's see, is that 76, right? So 76 would have been where your TP should be set, right? So I got in after, I didn't get in on the shift, so I'm not going to get the full run, but I got out here at the high of the day, and it continued up for another 40 more pips. So I was a bit tight about that, but I got mine and I got out, right? With a nice 1-to-2 ratio, just about, with 40, 41, 40 pips. And this is how you set your TP so that you have a higher probability of it getting hit. You could say, well, oh, the ADR is 113, so I'm going to set it to 113 pips, but you know that wouldn't have gotten hit. It went up and it hit, did a nice run, but it didn't go that far to hit a full ADR divided ADR full ADR. So this is how you want to. This is what you want to do when you're setting your trade up to set a good realistic TP for it to get hit. Um, I I find this to be very helpful. I hope this was helpful for you guys. This is one of the things that I love about the strategy that we use and that we're learning is that everything is precise, everything is predefined. Um, and one of the things that is important as well is when you're entering positions, you want to enter this is the reason you want to enter as close to the low of the day or as close to the high of the day as possible so that you can catch more of that ADR, that average daily range of that pair, right? So let's find an example where, oh my goodness, that was a nice trade. Anyway, so like here, right? You have this example where your first entry would have been up here at this candle here. Let me zoom in so you guys can see. And don't worry, guys, I'm going to take questions in a sec. I'm almost done. The entry candle would have been here, the first entry. Second entry would have been down here, right? And so look how far you are from the peak of the day, right? Your ADR has already gone 70 something pips out of the 109 pips that it moves in a full day, right? So if you're entering here, look how far you are from the peak. So you can't set an ADR divided by 3 times 2 if you're entering down here because you're close to the bottom of the ADR. Your ADR is almost spent at this point. So this is, situational awareness when it's like, oh yeah, it's a good delo. The aqua's close, the 200's close. Let me get in, and I'm gonna make 50 pips off of this trade. But you got to know where is your entry in relation to the high end or the low of the day, so that you can again set a realistic take profit, right? So let's see what's going on. Time frame. Typically, it depends on what kind of trade you're taking, Adeola. For scalping, you want to trade 5-minute, 15-minute. This is the 15-minute time frame that I'm looking at. For longer term trades, swing trades, and intraday, you want to look at 1 hour, 4 hour, and daily. And let's see. Yeah, so yeah, if you guys have any questions, you guys can drop them in the chat, or um, you can unmute and you can ask your question. But that's all that I have for today. You're welcome, Tracy. For swing trades, what time frame do you confirm AGB on? So I don't want to get into too much of DeLorean specifically, but we look at verifying the overall trend on the 1 hour and 4 hour time frame for every type of trade. You can use higher time frames than that, but we focus on the 1 hour and the 4 hour. So yeah, guys, if this was helpful, subscribe. Click the link click the link to subscribe to my YouTube channel. It is here. I'll drop it in the chat again. And this is the first of many indices. I don't look at ADR for indices. There's different rules for indices, and I don't know them well enough to go through how to factor in ADR for indices. I appreciate that, Cheryl. Yeah, this is the first of many. I'm gonna post this recording to the channel, as well as I'm gonna drop my notes in the chat so that you guys can have it for reference. So Maria, that is a very good question. I going over a blown out pair. So that is basically, let's go back here. And when a pair is blown out, so to speak, it's when the A range has exceeded what we consider to be normal. Typically for majors and crosses, excuse me, you want to see your A range be between 0 and 50 pips. And if it's more than that, then it's blown out and you want to, either not touch it or be careful trading it. Like for example, here, well, no, this is a wise man pair. Let's look at, there's different rules for the wise men, for the 5 wise men. Let's look at a regular pair and see where, if we can find a blown out day. Um, Again, it's going to be, actually, no, let me look at something a little better than that. Let's look at a GBP pair because they be doing some stuff in the A range on these. So base, let's look at, so basically, I'm not finding one right now, but basically if this A range box is more than 50 pips, like if they shoot up during the A range, more than 50 pips, then you don't want to try to trade it as if it's um, a normal day. You kind of want to stay away from that because once the broker sets their high and low, they can move in between here without putting any money into the market, and so they can trap you up really easily with a really big A range. You want to see a clearly defined A range with a new high or a new low before your entry to get in. Like here, it was close, but it was not really blown out. It did make a new high and then your entry and then bam. So this was actually, it looks like it was holding for news down here. Um, so you can see here news, you can add news to your chart. This is a quick tip. You can add news to your chart so you can see when news releases are happening that are related to your pair that you're looking at. So this normally would happen before kill zone is done at 10, but it was holding for the news to drop and then they made their move after. So that happens sometimes. They were, trapping pretty much before that, and then the entry came after kill zone was over. Let's see, any other questions? For the Forex volatility calculator, is there a go-to amount of days to enter? It goes by weeks, the Forex volatility calculator. I I kind of just stick to 5 weeks. I don't really use this. I just use what the indicators say really. But I don't know. I guess if you want to see more data, you can add a higher amount of weeks. But I don't really know. Um, oh, how to add the news? It's pretty simple. It's just right click, go to settings, go to events, and click on show economic events on chart. When I first started trading, I saw these down here. I was like, what is this? I turned them off, didn't know what they were. And now I was like, I saw somebody else using them. I was like, oh, that's what that is. So I put it back on. But yeah, I think that's really helpful. It helps to for you to be able to see. So like I don't even check Forex Factory anymore. I just click on these when I'm um you know when I see them down below and see what's going to be happening during the day. So for a regular pair, if A range is over 75 pips, it's considered blown out and not playable. So for a regular pair, if the A range is over 50 pips, it's considered blown out. For the Wiseman pairs, because their ADR is so much higher, they can have an A range of 50 pips, of more than 50 pips up to 75. So for example, on GN, um, like here, this is, even for a Wiseman pair, this is blown out, right? So we wouldn't have, because right here, this wouldn't have been a typical vector play. This is because you're not, there's no new high or new low. This is a different kind of trade that you would have had to take here, and we haven't learned that officially. So when you see stuff like this where the A range is really big, um, it's more risky. So you want to take look for something easier, right? With GN, A range is 47 pips, made a new low, entry candle here, and you collect your pips, right? So here, 53 pips, it's still playable, but you see it didn't make a new low or a new high. This is a different kind of play. We're not, so you want to take the higher probability plays where you see like a textbook entry, you know, that, wait for them to give you what you want, basically. What do you see? Do you like what you see? If you do, click the button. If you don't, move on. If this doesn't look like what you want to see, you don't see a new high, you don't see a new low, and it's kind of just in the middle here, leave it alone. Find something easier to play. When setting up risk to reward and it doesn't meet with a 1 to 2 with appropriate TP level, do you not take the trade? No, don't take it. It doesn't meet the 1 to 2, so don't take it. Find something else, because there's always another trade. And if you don't find something that you like that day, don't trade. You didn't lose any money today. Great job. It's a good day. You know. Um, so let's see, any other questions? Uh, do you take all your trades on AGB? Let's put it this way, Adiola. If it ain't AGB, it ain't CME. I don't mess with non-AGB stuff. Unless I see a really nice dealo on the DeLorean scanner, I don't touch anything that's not AGB. I just don't do it. I don't I don't I don't care to take more risk than needed when I'm trading. That's kind of my philosophy lately, and it's been working for the most part. So why change it if it's working, Yeah, AGB is life, guys. I don't even look at, like, you see all these down here on my hit list? It says non-AGB pairs. I don't even look at these. In my mind, they don't exist until they come into AGB again. Like, Eurochef was AGB for like 10 weeks straight. It's not anymore, so I'm not even looking at it. Like, what? I'm good. I'm good on that. Um, and yeah, so all my AGB pairs, these are my focus, and gold is AGB again. So I am happy about that. But yeah, thanks for joining, guys. I am done. Like I said, I'm going to drop my notes in the chat, and this recording is going to be posted in the on the YouTube channel. You guys will get an alert if you subscribe. And yeah, I will see you on the next one. Um, I'll probably do another one next week. Um, uh, I'll probably redo the divergence training next week. Or, if you guys have any requests on what you want to have a session on, just drop it in the Matrix chat and we will work on it. Thank you so much for joining and supporting. I hope this was helpful. You guys are great. Love you guys. I will see you in the chat and on the charts.